Hello and welcome. On 7th October 2023, 52nd meeting of the GST Council was held. During this meeting, the GST Council has recommended several changes. In today's video, let's talk about 4 such key changes, starting with supply of goods or services by Indian Railways. Being in business, if you use rail transport to move goods to your clients, then you would be required to pay 5% GST under RCM, reverse charge mechanism. During the 52nd meeting, it is proposed to tax this under forward charge. That is, Indian Railways would be charging GST and issuing you a tax invoice, and you would no more be required to pay GST under RCM. What is the use of this change? 1. Indian Railways would be able to avail input tax credit, which in turn would reduce their cost, eventually reducing cost for businesses and consumers. 2. This would reduce compliance burden to you because no RCM is applicable. Second change, taxability of personal and corporate guarantees. First, let's talk about personal guarantee. Being a director, if you offer a guarantee in your personal capacity to any bank or financial institution against loans or advances sanctioned to your company, then such a guarantee is a personal guarantee. So far, it was not clear if GST is applicable on such guarantees. In the 52nd meeting, it is proposed to clarify that in case of personal guarantees, if there is no consideration either directly or indirectly, that is, you don't get paid for offering this guarantee either in the form of money or in kind, then taxable value of supply in such a case would be considered as zero, so no GST would be applicable. To put it differently, if there is a consideration, that is, if you get paid either in the form of money or in kind, then actual consideration would be the taxable value of supply on which GST is applicable at 18%. Now, corporate guarantee, that is the guarantee for related parties. Say holding company offering guarantee for its subsidiary for a loan amount sanctioned to the subsidiary company. In the 52nd meeting, it is proposed to clarify that in case of corporate guarantees, taxable value of supply is equal to 1% of the guarantee amount or the actual consideration, whichever is higher. Continuing with our example, let's say the loan amount sanctioned to the subsidiary is 100 lakh and there is no consideration here. So 1% of this 100 lakh is 1 lakh, which is the taxable value of supply on which GST is applicable. But if there is consideration, let's say the holding company charges 2 lakh for offering this guarantee. So taxable value of supply in that case would be 2 lakh on which GST is applicable at 18%. This valuation would apply whether or not the recipient is able to avail full input tax credit. That is, if the subsidiary company can't avail full ITC, say because of exemption, even then this valuation is applicable. So GST charged in such a situation would be a cost. Now the third change, amnesty scheme for filing appeals. Let's say you have received demand order either under section 73 other than fraud cases or under section 74 fraud cases of CGST Act. And let's say this order was passed on or before 31st March 2023. If you don't agree with this demand, then you have an option to file appeal, and time limit to file this appeal is 3 months, which can be extended by another month if there is a reasonable cause. Let's say you have not filed appeal because the time limit was over, or let's say you have filed this appeal after the time limit but appeal was rejected because it is time barred. In such a situation, 52nd meeting gives you another opportunity to file this appeal, and this can be done up to 31st Jan 2024. But here you have to pay pre-deposit of 12.5% of disputed tax, out of which 20% or 2.5% of disputed tax has to be paid through electronic cash ledger. For instance, let's say tax under dispute is 10 lakh. So 12.5% of this, that is 1.25 lakh, is the pre-deposit here. Out of this, 20% or 2.5% of disputed tax, which is 25k here, has to be paid by cash, and remaining 1 lakh can be paid using your electronic credit ledger, that is by using your input tax credit. So if you're someone who satisfies all these requirements, then be sure to make use of this amnesty scheme. Now the last change, automatic restoration of provisionally attached property. In some situations, GST department, in the interest of revenue, can issue order in DRC 22 to provisionally attach any property of yours, including freezing of your bank account. And this order is valid for a period of 1 year, after which it can be released against written instructions from the commissioner. Earlier, we have seen that either this instruction is not sent or there is a delay in sending this instruction, because of which this attachment continues even after the period of 1 year is over. In order to ease the situation, in the 52nd meeting, it is proposed to remove this requirement of written instruction. That is, once the period of 1 year is over, whatever property that is attached or frozen bank account would automatically get released without the need for this specific order from the commissioner. This is a welcome change. This was about the 4 changes which I wanted to discuss in this video. In addition to these changes, several other changes have also been proposed. That is, change in rate of GST on certain goods or services. Then it is proposed to issue clarifications related to place of supply, export of services, etc. Then it is proposed to make changes in conditions of appointment of president and member of GST appellate tribunals. If you would like to know more about all the changes, you may go through the press release. The link is in the description. Before we wrap up, these changes proposed would be effective once CBIC, that is Central Board of Indirect Taxes and Customs, starts issuing relevant notifications. With this, it is a wrap on this episode. Hope it was informative. Thank you for watching.